Good morning. My name is Scott Rudd, the Chief Strategic Officer at T3Live.com.
And I'm Brittany Umar, and together we bring you Morning Call. So you're seeing mixed markets around the world this morning, as seems to be the theme so far for 2014. Our futures down about 4 to 5 handles, though, after a prominent Goldman Sachs analyst actually said the S&P is overvalued on most metrics. Scott, would you agree with him?
You know what, I'm not a fundamental analyst, and every one of them has different type of ratios that they use or different kind of models to go with. You know, for me, I go with the technicals. And at this point, I think he stated that we're at like 16, 17 times S&P earnings, so we'll get to see what earnings come out like in the next few weeks to figure out if it could go up or down. But you know, at this point, I'm just going to look at the chart. And if you look here at the SPX, you will see that, you know, we've had a nice move. So I agree with, maybe we're not undervalued, but you know, you look at this macro chart, you know, that's a trend that's not even coming close to being tested. Then you even have this accelerated trend line that we took off in the fourth quarter with, and there we are up there. So, you know, if you navigate the markets for alpha, if you navigate the markets for P&L, you need to know exactly what's going on in here. 1823 is your big support with some micro support here at 1830. And if today we go from red to green, okay, and we start taking out 1843, then 1848 is going to be the spot that if you're short, you probably have to cover, and if you're underinvested because you don't want to put money to work so far this year, a spot that you might have to get some more exposure. So right now we're still in this range. We're working off the last 10, 11 sessions of the year on top of a big year. So with that being said, I think, you know, we have a lot of the same going on, and we'll see what happens during earnings season.
Well, we've talked a lot about the theme of rising rates and playing them through, going long the TBTs, but the TBTs actually got hit on Friday after the disappointing jobs number, and we saw gold go up. So now how do we navigate these areas?
I think that whole scenario was a bit of a curveball. Everyone, I think, you know, the day before the actual jobs number, Goldman came out and added 25,000. They were looking at 235, 240. So when the number came out, it was a bit shocking. And I think, you know, what really set home was, you know, every time we've had this jobs number, you've had the unemployment rate going down. And for the first time, they really couldn't mask it and say, oh, yeah, things are getting better. No, it's because the participation rate is at a 36-year low. And listen, you know, there's nothing we can do about it. We can't do anything about the Fed's action or what goes on in Washington. We can only look and maneuver our own process based on our time frame. And as far as the TBTs, we've talked many times on how, you know, they're a little random, they're hard to trade, but probably good in the drawer as a hedge against maybe your bonds or whatnot. And if you look here at the TBTs, I still think they're fine. You know, this range that it's been in, it just broke below. So as a trader, if you were long it, probably hurt a little bit, it stung. You know, but with that being said, you know, maybe trade versus 75.11, and if you have it in the drawer, no big deal. You probably have it in the drawer from early last year when we started talking about it. And really, you know, this is more of a spot. If we start to get below, you know, 73-ish or this big support in the TBTs, then I would think maybe there's something potent and changing. But for right now, it's just a little bit random, you know, which is what we saw a little bit last year. And then as far as gold, you know, we've talked about the downtrend from 2013, the spot to navigate. You know, you could have navigated here when it broke this trend line around 160, and then when it broke macro support. And then now, looks like it's still working on a double bottom. I'm not convinced. There are some people trading it. You know, you could trade versus double bottom, and if gold really wants to start acting better and get people like me a little bit more interested, you know, you just, I guess, have to hold Friday's gap, 119.58, and continue to act better. You know, you had your gap up here, went sideways, digested, another gap up. Now let's see how we digest Friday's gap to see if that strength was real.
Well, as Scott said, this is the week that earnings really start to heat up, and banks will be in focus, and they have been a strong sector as of late. Do you think they're priced for very good earnings?
Well, the banks have been where the outperformance has been. Thank goodness for the action in Bank of America and Citigroup and some of these. So they need to be good. And I think Wall Street wants to see actually how much their earnings are getting impacted by all of these, you know, sanctions and all of these restitution funds and everything. You know, every day you hear about $1 billion here, $1 billion there. So we'll see, you know, what it does to actual JP Morgan's bottom line on Tuesday. And then we'll see, more importantly, how the market reacts to it, considering that these banks have had a big move. So with that being said, you know, we have to watch the banks. You have to know which banks you own, what your time frame is, and then we'll get a little bit more into support and resistance, you know, actually in today's recap of tomorrow.
So do you want to show us the levels of the XLF then that you're watching?
Sure, let's go right to that one so you could maybe, you know, write this down ahead of time. I'd say as long as the XLFs hold above the 21-day 2172, I think that the banks will be in outperforming spot. You know, you always want to trim and trail, you know, as you extend higher. So, you know, I wouldn't be in tier 3. But holding a tier 1 for what I think could be continued higher prices this year makes sense, especially if you're not that active.
All right, well, let's continue to check the temperature then of the different sectors. Let's talk the home builders, which got going on Friday after that disappointing jobs number had reached back off a bit. Good for the home builders. What do you think now?
I think that it's been a spotty area for the last 6 months, but it looks like it's getting some traction. And if you've sat through the spottiness, that's okay. As far as like a trade, there hasn't been that many trades there. But again, if rates are not going to be going up, with any kind of velocity, you now have this upper area in the home builders and in the XHB that looks good. And if it wants to get some momentum, it could break above this 33, 33.50. Overall, you have a really very spotty, hard to trade trend here in the home builders. But if you're just sitting in them, I would say just continue to sit in them. And if you want to trade, find some of the individual names And my guys on the desk, I have a lot of people that trade, and I don't hear a lot of talk about the home builders. So that tells me that they're not as clean and they're not breaking out, not like they were a year ago or even a year and a half ago when it was more of a focus.
What about biotech? Because bios have been on fire, but we've talked about how these names can be kind of tricky to trade. They're very data driven. What about playing, say, the IBB?
Well, that has been the place that every trader is talking about. Ever since that news came out on the kidneys with the ICPT, this group has been in fuego. And it was, a very active group last year. You look at this, ETF, where if you just want to go with the actual group versus the individual names, look what's gone on here. Okay, what a move. Okay, you're talking about a group that's been in fuego for a long time, extending through what could have been a really nice breakout again. You look here, you see this. I remember guys talking about, oh, let's just buy the 21-day, and they had no idea this was going to happen. Okay, and then here was your breakout. You have big buyer moving like BIIB, and then you have other names, and this was really what ignited it again. But again, you got to be very careful, guys. I did not touch this just because this is either what we call a widowmaker, meaning if you were short, you might have, you didn't do so well. If you made money long, it's more of a lotto ticket. And this kind of thing is more often than not could be trickier. And today, I think it's actually down $150. So, I would stay away, and I would maybe look at some of the second and third tier names that we talk about in the chat room during the course of the day.
All right. Well, while not in fuego, the ags have been acting better. What do you think about these?
I think that last year this was a group that was just avoided. This year, I think you could focus on them a little bit more. We saw a stock like CF break out. We've been seeing a little bit better action in the POT, Mosaic. And if you look here at the MOO, which is the ETF for the ags, you will see that, first you had this downtrend that we pretty much, I'd say right around here, broke above. And now you're seeing commitment above it. So with that being said, I think that this group is acting better, and if it could start getting above 54.50, at some point in 2014, this high will be taken out. If you want to put a little bit on and put a stop maybe at around 52.50 and get some ag exposure instead of some of the names, like look at CF. Boom, there's some action in the ags now, but again, if you don't want to pick them, that's the ETF for them.
All right, well, coming up, we're going to go in the trenches with high beta tech stocks, but first a quick commercial break. We'll be right back.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.
We're back in talking high beta tech stocks, starting with Apple. Pretty tricky since announcing the China mobile deal. Scott, how are you navigating this right now?
Well, I've been navigating it a little less because it hasn't really given any reason to be overly involved unless, I guess, you were shorting rallies, which I usually don't do in Apple. It's just not my cup of tea. So with that being said, ever since the China mobile news, it has been a frustrating trade, considering that, for the whole second half of 2013, it trended higher. There was buyable areas. There was a lot different. So we'll see if that changes soon. Maybe it needs to wait a little closer to earnings. Who knows? You look at the chart here of Apple, you will see, this was that double bottom over the summer. Here was that first move off. Remember 2 quarters ago, the earnings gave you a really nice move. And then again, it's set up for higher prices, set up for higher prices. And then if you take a close look here and see, what has taken place since the China mobile news, this was your gap up and it failed. Okay, and then this was your next pivot point that didn't hold. And now this trend line, we are now below. So with that being said, people are like, oh, maybe it's a trap. Maybe it is. If it is, then you'll see a pop right back above 540, 540, 50 quickly. It has to happen like either today or tomorrow. Otherwise, it could start trending lower. And I think it's up a little bit this morning. If it gets below 531.11, I guess you have 527, and then you have the 100-day, which doesn't come in until about 517. So for me, I avoided the last 2 days or so because it's been tricky. If it starts acting better, maybe I'll come back. But for right now, I'm out of the way.
How about Netflix? The composure of this one seemed to have changed when it broke its accelerated trend line back at the end of December. Are you playing this one now?
Now, this one, I think you could be tactical. Like we talked about how it changed when the accelerated trend line broke. If you take a look here with momentum names, you have to know when that takes place. And if you look, you will see here is that trend line that it was following for so long, and then look, boom, it almost, you could see it perfectly, obviously after the fact, but when it happened, we also talk about it. What was even more important is look how it hovered below it. So it didn't just break below it and snap back like sometimes these stocks do. It broke below, hovered below, and now it's continued to the downside. So with that being said, it's at the 100-day. Maybe it's down pre-market. Kind of like this day when you had a little tactical long that got, that didn't amount to anything. You can look at it again. So 330.53 is your pivot. If it's opening below it, see if we can go from red to green. If it's above it and does a red dog reversal, take a look. But just be a little careful because the 200-day is all the way down here. So with that being said, there's a lot of room. So I would just approach this, tactically, because if you were riding this trend broke right around there.
Well, social media continues to be an active spot, and we'd been talking about the series of downgrades that had been hitting Twitter, and it was actually upgraded today by Goldman Sachs. So will this one be on your radar today for potentially getting some momentum back?
With the futures down, that was one thing I was like, maybe today's the day Twitter goes from red to green, and then I saw that it was upgraded, so now it's up. But that doesn't mean I'm just not going to, trade and get away from it. It just makes it trickier because there's a little less room. So if you want to look at levels here, you'll see that this was a support that held. Okay, now the question is, can it break above this mini downtrend to then test the bigger one? So with that being said, it's got to get above 58.76 and hold above it to perhaps move higher. You have, these moving averages. If we were to reclaim it and just say close above, 60.81, I would think that, if anyone's still short it, they'd probably get worried and start covering a little bit. And if people were looking for a long entry and didn't do it on last Thursday or Friday, this would be a spot. So, I think Twitter will be a focus. And then also, just real quickly, Facebook, it's been acting much better since, since actually not since anything, for a while now. But this red dog reversal right here put it back on the map. Then it came in. Now it's holding higher. I'd say the longer it continues to hold above this 57-ish, the higher the probability. Next time it breaks above this 58.50, it's clean. Tried here, wasn't ready. Maybe next time there'll be a nice trade there.
And we've got 3D names acting well as well. 3D printing stocks like 3D Systems, which is hugging the 8-day. Would you prefer to play this one over one of the smaller, newer issues?
Well, as long as these bigger ones hold in there, the newer issues that have tighter setups could be still in play. And Triple D, it's a little loose and random, but it's been trending higher. You look at this stock, and it's still hugging the 8-day. As long as it stays above the 8-day moving average and this line, I still think it's intact. A lot of people are trying to call top here, and that hasn't happened yet. But again, when you see momentum leave, you change a little bit, and it hasn't changed yet. So with that being said, as long as it's this group or the stock stays above 90, 92, I think it's fine. I am looking at some of these little setups and something like VJet that had a nice move about a week ago. It's getting tight again, perhaps above 45. It can get going. Also X1, which was a big winner last year, that broke its trend line right around here. Okay, has been working its way higher. Nice little setup again over here. So if it were to break above 68-ish, it could go. So I'm looking at X1, VJet, and even a little Onvo. So we'll see what happens there.
All right, let's do some quick hits here and talk some mega cap stocks which are acting a little bit better. We've got a name like Microsoft, which is coming out with Windows 9. Is this one on your radar today?
Yeah, I think this one in the hole near like 35, 36, it's worth a look. It's not really showing signs that it's back and it's in play and it's a go-to name, but I think it's something worthy of a look. You look here at the chart and the stock, and you know, it pulled back on the talk that, you know, they're not going to get the CEO from Ford and they're still having a problem finding someone. But overall, I still think it's fine. You know, at some point maybe it takes out this 36 and change and gets back up to test this 37 area. I think if you want some mega cap exposure, this is one to have a little bit with.
Well, just like Xbox One versus PlayStation 4, if you're going to talk Microsoft, you got to talk Sony. What do you think about Sony?
You know what, Sony came on my radar a few days back. It had a big igniting bar, and then it's really done nothing since. So, you know, it did hold on Friday. I'm in it, and I'm thinking, you know, maybe this was the low here. We shall see. You know, anytime you get an igniting bar like you saw here, you would have thought maybe you had an extended move. So at this point, it's still in the game. I would say if you're long it, put your stop in 1747, and then who knows, maybe it starts acting a little bit better. First thing it'll probably do or try and do is fill the gap up to 18.
And let's also touch on Scott's favorite bank, Bank of America. We sticking with this one still?
I'm still in there. You know, so I've tried to be long these banks for forever or for a long time. Right. You know, and recently, you know, I did sell my Citigroup just because I had a nice move with it from 52 to the highs, and I figured I would be cute and try and buy it back. Bank of America, I'm still in. You look at the chart here, it still looks good. You know, this was that last channel that ignited above. Then this was that last trade, or the last time it was a really nice go grab it. You know, and here it's flagging again. You know, it's above the 8-day. It's up a little bit pre-market. If it were to get above 1693 and stay above it, you know, we could see 17 plus, and hopefully we see 17 plus pre-earnings. So this way we don't have to perhaps hold through earnings, which I think are on Wednesday.
All right. So your closing thoughts then, as we begin the first trading session of the week.
I think we have our range, and we just need to see how it holds. You know, I think the Goldman analysts put a little pressure on the futures, but let's see how the stocks react. I know that everyone wants to see earnings come out, and that's what we're going to start seeing this week. You know, banks are going to be front and center, and we'll see what they report and how the market reacts to those reports. As far as bios, they've been on the move, and there's been individual action in some of the tech names. So I think, you know, overall, if you look at the actual market in the S&P, I think we are almost flat on the year. And that's after absorbing a huge move in the fourth quarter for 2013 on top of an epic 2013 and strong 2012. So all in all, I think the bulls are a little bit spoiled. And just when the action changes a little bit, we change it and we lower our expectations. And until we break below, just say 1823, I wouldn't have short on the brain.
And that's your morning call for this Monday. Happy trading. Have a great day.